So thank you very much. We'll just let latecomers drift in because this is not really the main event, is it? So welcome to the Annual General Meeting of the Law and Economics Association of New Zealand. My name's Andreas Heuser, I'm the current president. So I declare the meeting open. We have 3 apologies. So Stephen Franks, Matt Woolley and Richard Mead is probably on Zoom for the first bit but may have to leave. So I've noted that as a partial apology. The minutes of the 2019 AGM have been circulated and they've been sent to people participating via Zoom. Are there any comments or corrections to those minutes? There are none, so I move that the minutes of the 2019 AGM held here at Buttle Finlay last year on the 24th of June be confirmed as a true and correct record. Seconder. Thanks, Iwan. Now, moving to the financial statements, which we've distributed. Looking first at the income statement, we had revenue of $11,000 and expenses of $14,450, so an annual loss of $3,437. It's the first time in some years that we've operated at a loss, but we've incurred some major expenses this year. So the major ones were the essay competition, which amounted to $4,500 in prize money. We made a significant investment in the new website of around $5,000. It's a once-in-a-decade capital investment, really, that was a necessary and very positive step, we think, and spent $4,400 on travel and accommodation expenses for our speakers. Now, we hold around $70,000 in cash and term deposits, and we're therefore in good financial health despite the annual loss. We've been growing our resources over the longer term, and I'll talk about our plans for sustainably deploying those funds and our intention to review our activities in my President's report shortly. So, with that, just noting that I will discuss what we plan to do with our review. Are there any questions or comments on the financial statements? Yes, Grant.
The individual membership income seems extraordinarily low. It's just a function of the fact that there's a hell of a lot of free riders around here.
That's a good question, Grant, thank you. So I think there is certainly, yes, there is a free rider issue, but there is also, there's been a technical problem with our website, which was one of the main reasons we wanted to review that, and it's been challenging. I'll talk in my President's report about how we've changed website provider as well, but we think that now we will be following up with individual members more effectively. So what's been happening is if you didn't renew your membership last year, you didn't get the automatic email for this year, and so it sort of compounded over the years because of a website and database management problem. So we think we've resolved that. Thank you. So no other questions, so I move that the financial statements for the year ended 31 March 2019 be accepted. Can I have someone to second that? Thanks, Tony Dello. Thanks. So now moving to the appointment of the committee for the 2020-2021 year. The nominees are for President myself, the Vice President Auckland Richard Mead, Vice President Wellington Diego Villalobos, Secretary Sophie Harker, Treasurer Iwan Peterser, and we had 4 nominations for committee members. That's Brett Woods, who is a new face. Thanks, Brett. He's a senior regulatory specialist at Vodafone. So for those of you who haven't met Brett, he's up there in the burgundy. Simon Wakeman is joining the committee again He's Principal Advisor in Innovation Policy at MBIE. And we're pleased to welcome Lauren Tyler Harwood, who is a recent Foreign Affairs staffer and current postgraduate student. She's based in Christchurch, and I hope she's joining us on the Zoom. So welcome, Lauren. And Daniel Watt, an economist with Sapere, is also joined the committee and is also new. So he's a recent graduate and just joined Sapere. So we're thrilled to have some new faces on the committee, so thank you. And because only one nomination was received for each position, the nominees will be declared appointed to the committee at this AGM. Now, we may co-opt an additional 4 members, and we intend to do that. So we'll co-opt Sally White, who's here. Thanks, Sally. She's with Sapere. Chris Parker, who is with the Treasury. Sasha Daniels, who is a lawyer with Spark. And Bradley Aburn, who's a senior associate at Russell McVeigh. So they've all indicated they're willing to be co-opted, and we intend to bring them on board at our next meeting. So thank you. Now we come to the matter of the honorary solicitor, and I'm just looking at Tony, and that's a nod. So I move that Buddle Finlay are again appointed as the association's honorary solicitor, and we note with thanks their support. They host our monthly meetings and also have hosted more than their fair share of LEANZ seminars this year. So thank you very much. So now on to my President's report. So thank you very much for your attendance and support over the past year. We've had another successful year of promoting law and economics in New Zealand. Our activities have included the flagship seminar program, a major website refresh, as I mentioned, and the essay competition, which is now in its 2nd year. I'll briefly discuss those highlights. So we held 10 seminars in Auckland and 8 in Wellington. Average attendance in Auckland was 42, which is double the average attendance of the previous year. Average attendance in Wellington was 66, which is a 50% increase. So the seminar program and its growing popularity is a huge credit to the organisers, Richard Mead in Auckland and Diego Villalobos in Wellington. So they both dedicate a great deal of unseen effort to arranging these seminars, and we thank them. We covered a range of topics again, so from the Treaty of Waitangi, dairy sector regulation, anti-smoking policies, tech sector regulation, and a review of the Commerce Commission's institutional challenges. That was a really well-attended seminar here at Buddle Finlay before the lockdown. And we recently had a popular panel discussion on the COVID response policies that was done via Zoom. So I can proudly say that LEANZ remains a safe space. It's dedicated to maintaining an open forum for the rigorous discussion of important ideas and analysis. And I think this is an important feature of a free society, and it's becoming even more important in this period where we can observe overseas that some concerning trends. I'm consistently impressed with the contributions of our committee towards identifying law and economics topics and relevant speakers, and I thank them. A range of law firms have contributed generous support again to LEANZ. They've hosted our seminars. This comes with significant cost, we recognise, and they've always put on a very generous spread of food and refreshments, so we remain very grateful for that. Thank you. Just a note on online seminars. So we transitioned this year during the COVID restrictions to an online format that was run at lunchtime. The feedback was extremely positive, and we acknowledge that for some members they appreciate the evening seminar format and the refreshments, but we received such positive feedback about the daytime and combination with Zoom that we've taken this approach for the AGM. And the talk with Adrian Orr to follow, and that's to reflect that we've got a lot of busy professionals among our membership and among interested people that come to our seminars, and they have family commitments in the evenings, and so appreciate that. So we're looking forward to getting a good balance between the daytime and evening seminars in the coming year. As I mentioned, we had a website refresh. mid last year. It was a huge improvement on the earlier version. We've incurred some reasonable costs for the development of the website and ran into some minor differences of opinion with the developer over the level of service and the needs of the members when we first developed the website. So we've now switched to an excellent provider called Omnibrand that are providing some proactive customer service, and will be solving some of those issues that Grant, you touched on with, and my response to your question touched on with billing members. So that's been a positive step forward. I'll touch on the essay competition as well. We held an essay competition for only the second time. I mentioned it at the last AGM, but at that stage the winner and commended runner-up were not yet known. Lauren Tyler Harwood was the deserved winner with an essay on the law and economics of water allocation for the Waimea River. And runner-up was Ricky Fuji Rajani with an essay on sovereign debt litigation using a game theory model. And we're extremely pleased to be able to welcome Lauren now as a committee member. So we definitely got extra value from the essay competition and prize this year. Due to COVID, we didn't run an essay competition for the first half of 2020, but I've asked committee members to volunteer to organise the essay competition in the latter half of this year. So finally, or not quite finally, so just on to review of activities. I mentioned when I discussed the financial statements that as a committee we've resolved to review our activities and our income and report back to members with any recommendations. So we have healthy financial reserves and the income from membership fees exceeds our expenses in most years. So since I joined LEANZ in 2014, our cash balance has grown from $38,000 to $70,000. As a committee, we've acknowledged that we need to work harder to identify ways to sustainably deploy the funds to promote law and economics. The essay competition with its generous prizes for junior scholars is one such initiative, and we'll continue it. The website is another way to promote law and economics, and we'll find ways to use that more effectively. We intend to draw on previous year's activities for ideas. In the past, we've hosted visiting academics, we've provided financial and organisational support to those academics as well. And Richard Mead should be commended for his work there in previous years. We've put a lot of effort into building stronger links with the academic community, and I commend Bryce Wilkinson for these efforts. Some years ago, the association supported postgraduate scholarships. We have thought about refreshing a law and economics online lecture series. And so there are some ideas, some very concrete ones, and we're going to continue to explore how we can promote law and economics in our activities. And I just acknowledge we are all volunteers on the committee, so there is a limit really to how much effort we can put in, but we're going to turn our minds to it. So the review will also cover the level of our membership fees once the new committee is constituted. We appreciate that many of our corporate and individual members may face reduced income in the current economic downturn, and under the association's rules, the committee can amend subscription fee levels at a committee meeting. So that is part of the review as well. Now, so penultimate point here, I would like to formally thank my fellow committee members for their excellent contributions to identifying interesting seminar topics and guiding our activities again this year. Special mention goes to the seminar coordinators, Richard and Diego, who I've mentioned. They both do an excellent job. Sophie Harker has again performed diligently as secretary. Iwan Peterser has managed our finance as well again. And we've had great contributions from Bradley Aburn, Simon Wakeman, Sasha Daniels, Ian Duncan, Harshal Chitale, Chris Parker and Sally White as members of the committee. And Daniel Watt joined late in the year, and he provided superb website technical expertise. We are very sorry to see Ian Duncan move on as a committee member. I haven't seen Ian today, but we're sorry to see him move on. His contributions have been highly valued over the past few years. particularly his efforts to welcome new members and new faces at seminars and generally provide feedback from members to the committee. And Harshal Chitale has also moved on, and we thank him for his contributions. And one final piece of special recognition, Professor David Teese has kept another generous tradition going, and he's provided cases of wine from his Mount Beautiful winery, and we thank speakers with those bottles of wine. I've given the game away for later. So that's the end of my report. So I move that be noted, and it's been seconded by Diego. Thank you. And so I'll call for any other business. There is none, so I call them AGM to a close. Thank you. Thanks. Right, that's your committee, just so you got the names. But now I'll move on to introducing our speaker. So we're really fortunate today to have Adrian Orr speak to us. Adrian was appointed Governor of the Reserve Bank in March 2018. He was previously Chief Executive of the Guardians of New Zealand Superannuation Fund and Chair of the International Forum of Sovereign Wealth Funds. He's had a long career in leadership and economics positions in the public and private sectors in New Zealand, as well as in the UK and at the OECD. His talk today is entitled Delivering on Great and Good. He'll provide insights on what the future holds for the Reserve Bank and the opportunities and challenges presented by the COVID crisis. Just a couple of housekeeping matters. We have people participating via Zoom. The camera is at the back there. There will be Q&A at the end. And so I'll moderate the Q&A. If you're in the room, raise your hand, please. And try and speak loudly because we're running with these microphones here. We unfortunately don't have microphones to take to you, so please project, speak clearly, and questions, not statements. For those participating by Zoom, please submit your questions in the chat function at any stage during the talk. And we have Diego and Sophie here, well, I think it's Diego actually, who will be moderating and will pass the comments to me, you'll announce the questions. You'll announce the questions, and yeah. So without further ado, welcome Adrian Orr. Thank you.
Well, thank you, Andreas, and congratulations on your AGM to see that done so smoothly. That's always a big relief, isn't it? So, hi to many, many familiar faces in the audience here. A great organisation and doing fine work, and so you don't have to take minutes of this one. Okay, so. I do have a prepared speech, and I just want to note that I've got a couple of Reserve Bank colleagues here with me today as well, so they're here to answer the hard questions accordingly. And I've turned up with a written speech because we are putting this on the record. All speeches publicly is from the bank are on the record, but not all have nicely written, and even the one that makes it onto the public record actually has some lovely diagrams and pictures. So everyone should be enthused to have a look. And the title was Great and Best, not Great and Good. So we like to try and aspire a little bit higher. We want to make it aspirational. We're not saying we're there, but why not be aspirational to try and be there? And that's not the best central bank in New Zealand because I'm sure some of you who look at monopolies, I know Diego does, we're probably under your watch, but we're talking around global behaviour. But anyway, tēnā koutou katoa. It's wonderful to be here. It is a real privilege. It's been to be here in person, actually. It's rather than talking to all of you. I'm now only talking to some of you in person and only some of you through the screen. So hello to the Zoom viewers. The only drawback, of course, is you have to make yourself presentable completely rather than just from about here up. So I've managed to just squeeze the trousers back on. Funny what COVID drawbacks did. The past few months have been incredibly challenging for everyone, and today I'll chat a little bit around what we as the central bank have been doing in terms of living under this very dark cloud of this COVID-19 pandemic globally. I'd say the recent containment has come to quite a relief for us all, but as we know, that containment is fragile, and also the economic challenges are here, the societal challenges are here, both here in New Zealand but also globally. And as I mentioned in the speech a bit further on, the pace is going to be more akin, I assume, to a marathon, probably even harder than a marathon because that has a set distance, rather than a sprint. So breathe through the nose, out through the mouth, and we will do our best to get through all of this. I want to talk a little bit around how we've responded to these events. And I also want to talk about the future, which I have to say is quite exciting, having spent so much time dwelling on the current or near past over recent weeks. Very therapeutic. I kind of recommend it to you all, actually, to go around and do some business planning and talk about the future and the opportunities and what you can do different, better, and so on. For us, it's been that period where we are putting out, as of 1 p.m. today, our statement of intent, what we intend to do over the next few years. And that in itself means that we have a significant challenge ahead of us and significant opportunities, but the team are well up for it. Probably, as you all know, I mean, we work collectively at Te Pūtea Matua, that's the Reserve Bank of New Zealand, to promote the economic well-being of all of New Zealand, current and future generations. And we do this mostly through ensuring that we have a stable financial system and economic system through our monetary policy activity on the way through. And so I'll chat a little bit around what we're doing this and what we're doing in that space, but importantly, how we're trying to provide a more holistic future to it. Through our statement of intent, what we really want to be is the epitome of a modern central bank that's both now and ongoing for the future. So we've got plenty of changes. And our vision, as we mentioned, is about being a great team and the best central bank. And that's in terms of the people that we hire, the way in which we do go about our business, and also how we interact with all of our stakeholders. So it is a significant challenge that we've put out there for ourselves, and one that we want to be held accountable to, and that's what the statement of intent is about over the next 3 years, the types of things that you can expect from us and hold us accountable for. We persist and will persist with the legend of Tāne Mahuta as a means by which we tell the story of the Central Bank of New Zealand. And we do that because it really assists us to explain how diversity, how inclusion, how collaboration really enables us to reach our full potential. So around being great and best, we have to have those features so that we can be as best as we can around promoting the economic well-being for all of New Zealand. Last Friday, timing wasn't in our hands, timing was in Parliament, but last Friday the funding agreement was signed off, and that's about what our expenditure envelope for the next 5 years. And in that funding envelope, and I'll chat a little bit about where some of the most expenses go today, but it represents a significant step up in revenue available for the Reserve Bank to do its job. And I do want to thank the Minister of Finance for seeing the necessary uplift that we have to make in terms of our capability, our capacity, our digital capability, really to be sustainable for the long term. Before I go into the statement of intent and our funding agreement, I do want to chat a little bit around what we've been doing through this COVID challenge. So it was about mid-March of this year, it seems like a lifetime ago already, that the economic implications of this COVID-19 pandemic really came home around global economic activity, slowing and then slowing to a virtual standstill, and really a start-stop behaviour going on across most of our trading partners. At the Reserve Bank, I am very proud of the team on how committed they were. We've responded in a very coordinated and transparent manner, and a lot of that was despite the very limited information available. both on what this pandemic was and around the urgency and pace at which it was approached us and the shock that hit the global economy, us included. Our actions were very much in tandem with the government's fiscal policy, and we've been very adamant to say that a shock like this has been primarily a fiscal policy challenge. Monetary policy still has an important role to play, but it has been more of a support role rather than the frontline role, given the nature of the supply and demand natures of the economic shock. Expenditure has had to be immediate, and you have seen that response. What were we trying to do? Well, initially we were trying to ensure that cash flow and confidence remained in the economy, and with a big part to cushioning the immediate blow of the COVID economic slowdown or economic halt. And especially once we started going into the various levels of lockdown and lockdown level 4. That's been a very standard response. I think globally you've seen slightly different shades of more or less the same things: fiscal policy taking the lead, monetary policy supporting, and about managing the first wave of that impact. I mentioned that it's a marathon, not a sprint, so we all came out of the blocks very quickly. We've all got into a reasonable position around many different types of strategies, and now it's about saying what is sustainable. What have we done to date? Well, as you should be aware, we lowered the official cash rate to 0.25%, and we said we would keep it there for the foreseeable future, at least 1 year from the date that we mentioned it. But we undertook and started a significant quantitative easing program. And I see Michael Callaghan in here. Michael, you have managed to get a sleep only in most recent days, sitting on our financial markets floor, being highly involved in the design and the implementation of these programs. We made sure that there was the provision of plentiful and cheap liquidity for the banking system through a series of market interventions, the way in which we manage liquidity in the system. We've been supporting the functioning of the New Zealand debt markets as well by having them included in this liquidity management. We've ensured the accessibility of cash. There was a significant run on cash in the first few weeks of the COVID-19 challenge. People felt more secure by having stocks of physical cash, and then that tailed off significantly, and especially so once people started to say, no thanks, can you waive the pay wave instead, please? And we've also been involved very much hand in hand assisting with the facilitation of treasuries and the government's responses. And that's been across quite a large series of, I suppose, acronyms: the Business Financing Guarantee, the Small Business Cash Flows, the Mortgage Deferral Schemes, wage subsidies, so on and so forth, in part through the fact that we have a lot of economic firepower in the Reserve Bank to assist on the thinking, and in part that a lot of it had to be agreed as well with how we would treat some of these around our supervision role and our provision of liquidity. We've been working very closely with the banking sector, in particular, in fact, all financial service providers, but the banking system because of its very critical role. And I do want to thank all of those in the banking system for working so effectively and efficiently. To think that they have achieved the implementation of quite a few of these new programs. They have been working very closely with their customers around loan maintenance, loan deferral, new loans, trying to make sure they stay on top of the longer-term best interests of their customers. All of that through a period of operating remotely. So it's a very, very significant challenge that very large labour forces have had across that wide spectrum of bank customers. I've already mentioned, this challenge is unfolding more akin to the marathon than the sprint. And while we've all got off to a very fast and coordinated start, and all feeling like we are at least nearing the end of the beginning, our challenge now is to find our tractor gear, to find our sustainable pace of how we are going to evolve our responses at the Reserve Bank, but also for the economy as a whole, for all economic agents. How are we going to be playing this out over the next 1, 3, 5 year period? It is globally significant and it will change much that we observe today in the way we behave in the future. So that's what we're looking for at the moment, and I reiterate to the banking system the important role that they play. At the outset of this pandemic, New Zealand, I've said if you had to go through an event like this, the place I'd prefer to start from was New Zealand, Aotearoa New Zealand, both its geographical location, its ability to manage its borders, but also that it was in a pretty good starting position in an economic sense. The financial system was sound and healthy, had a long period of good banking conditions. Capital and liquidity were at very strong levels, and in large part through bank regulatory requirements. Employment was very high, labour force participation at record levels, inflation above the midpoint of the target, and our government fiscal position very, very strong. So, if you had to say, quick, there's a challenge ahead of us, that's not a bad place to start. Certainly in a relative sense when you look across many other countries. For the banking system now, we've said that this is going to be a long period, and the focus on long-term customer outcomes has to remain. It's not something that felt fun to begin with. We won a few awards. It's something that we're going to have to stay with. I'm not surprised we've seen the banks operate as well as we have. One, they're highly capable. Two, it's in their best interests to make sure that their customers are well serviced. The quickest way of creating a problem into a real issue is creating a credit crunch when there may be no need for it. So we have been saying very loud to banks, make hay when the sun shines, put that in the barn, that's your capital, and feed out in the tougher times. And it is tougher times now, and we've been very clear to them that this is a time when you should be using those capital buffers to make sure that your customers are sustained through time. And so that is the real challenge in front of the banks at the moment, and it's been an intense situation for them around the long-term outcomes, what position are our customers, the difference between a liquid and insolvent, so on and so forth, are complex issues and very personal issues at the bank front. What we've been saying is at least you're starting with a very well capitalised position, use it. We're also saying to banks, by the way, we would want you to restock that hay in future better times, because that makes sense on a sustainable basis. I know it seems quite difficult for some people to understand, but when you are in a position where you've got good capital that you can use in hard times, then in good times you want to rebuild that stock. And we've also said to the banks that we will work with them around when we believe that climate is right and what the pace is for rebuilding that capital in the banking system to make sure that it remains sustainable. It's not a one-off shot. So that's where we are. Our economic stress tests that we put around in our recent financial stability report show that they are robust to a pretty broad range of economic shocks, and that using their capital they will survive and prosper. Of course, there are limits to this, and those limits are far from being tested at the moment, but it's a long way ahead for us. I am pleased to note that the retail interest rates have declined, in part with our lower OCR and our quantitative easing, and that the retail banks have continued to make new loans and reconfigure current loans and really work with their customers. So that's those are fantastic outcomes to date. As I mentioned, probably a bit too early to celebrate victory across all of this. We've got ourselves into a holding pattern, starting position around how to manage through something of unknown intensity and unknown duration, and that is a non-trivial task. At the bank, we're spending a lot of time on self-reflection, trying to make sure that we grab whatever lessons we have, and I know that's the case across all businesses in New Zealand and around the rest of the world. We learnt a lot about ourselves operating remotely, operating under these different environments, and a lot of them were well worth keeping. And so at the bank, we swapped our commutes and office culture for really multitasking with family and work. We shared all of our tasks with busy partners and flatmates, and we battled the usual technology challenges. And I learnt probably the best acronym that I've heard for a while, because it was read out to me a few times when I was ringing in for assistance, and that was called PICNIC. PICNIC, which meant problem in chair, not in computer. So when someone says you're having a picnic, you kind of get the idea now. Try switching it off and on again is a pretty good start. So this, the things we've learnt all the way through, and particularly for the bank, is really reinforced where we were with our statement of intent, and that is to significantly bolster our digital capability and our people capacity capability on the way through. So the statement of intent and what we're about is about the foundation for promoting this great and best aspiration team on the way through. The COVID-19 challenge hasn't been the only catalyst for change at the Reserve Bank. A significant challenge has been put in front of us now for a couple of years, and that is the revisiting of the Reserve Bank Act itself. And I really do hope that people in the audience here who are exactly qualified to be involved in both advice and submissions on the way through will remain active in that process. Our enabling legislation, the government established a kind of a joint team to make recommendations for the government decision, the joint team between Treasury and the Reserve Bank. That's been operating, I think, probably for the best part of 2 years now. Significant job. They've cut the job into two. The first part is around the Institutional Act components for the Reserve Bank, how we organise and manage ourselves, and the second part is around what we do with regard to the regulatory role, who we regulate, to what purpose, as well as a lot of the institutional management from deposit protection through to failure resolution. So it really is a significant refresh of the Reserve Bank Act, cut in two pieces, and the first piece is entering Parliament for discussion very soon. In coming weeks, before Parliament rises for the election. And so that will provide plenty of time for submissions, FEC appearances, and all of the action there. It is a really important part. At the heart of the change, you've still got the economic stability story and the financial stability story, the monetary policy, inflation, maximum sustainable employment, and the financial stability area. That all remains the same. But there are some significant changes that are in the Act. On the institutional side, probably especially for myself, the most significant change is the appointment of a new board. And that board will be the ones legally responsible for all decisions outside of those left to the Monetary Policy Committee. We've established this new MPC with its own remit, and that's got its own role, but the Reserve Bank Board will look more corporate-like. It will have all of the statutory duties sitting there, and the Governor will be reporting to the board. Of course, there will be room for delegations to the Governor and then ongoing management. But that is a significant change built around reducing concerns around key person risk. At the same time, it's all about how do you balance that with operational independence and the transparency that goes on. So there's a lot of detail in there to be completed. There's a lot of detail that will never be completed until a new board's established, because no one else can write the delegations policy or agree to those policies until that is in place. So that is that's a significant task ahead, and our job as the current kaitiaki of the Reserve Bank of New Zealand is to have as seamless as possible transition from the current to the new. We have been working very, very closely with the board, certainly since the day I started, as if they had that level of duties anyway now, but we are still revamping a significant amount of other work. In part because the other leg to the Institutional Act is to bring us more in line with the broader public sector reporting type requirements. And so that's as much about what we regularly produce, statement of performance, and how we are held accountable. So again, more reporting, more insight around what we are doing at the Reserve Bank. There is also ongoing progress around what is called the sectoral, I'm not sure why, components of the Act. I'm sure there's a good reason, and that is around legislating our purposes and powers for when we do our prudential regulation of insurers, banks and non-bank deposit takers. And that is the work that is currently out for submission. So there is a large bevy of documents. Of course, like many things, it went out just ahead of the COVID period, and so that's been extended. But can we have a show of hands of who has looked at that? As I'm just, this has got one. Grant, come on, you've lived and breathed this stuff. You'd be living and breathing when you can. Well, I'm going to get one of those onto it. Come on, team, we need you. We need your advice and input. So this is a real challenge. This is where the devil is in the detail there, because you can kind of wave your arms around deposit protection, and then someone says, well, what's a deposit? And then, well, who's inside, who's outside? All of these border issues, domain issues, and then failure resolution. This should be the Diego, come on, mate, you need to be chief whip around here and get this going. In fact, get one of these Treasury officials in here to explain what's going on, because it is really, really important. I don't say that because I happen to be the Governor of the Reserve Bank. It's going to be incredibly important for some sectors that currently exist, and will they exist under future different legislation? Will they make it into the Deposit Takers Act or not? It's going to be really important for the stability of the financial system, and also even around the efficiency and safety of key aspects of that. Can I have one more show of hands? Who's seen it? Was that really it? Mike, good on you, mate. We've got one person. That can't be right, can it? Wow. I'm sure that everyone on Zoom has said it. They're all hitting that hands up. Mike, you work at the bank. You can put your hands up. So. You haven't read it, have you? All right, there we go. I know you'll all be experts after the fact. So that's a really critical part. So the Reserve Bank Act itself will be highly refreshed around the institutional components, around how we organise and operate ourselves, and also what we're actually doing around that supervision bank regulatory role. So it's a critical piece of it. Phil, you've read it. Come on. God. I'm going to put it out in cartoon form or something. So finally, I'll just go to our statement of intent there. Jenny's read it. No? Oh. Is that why you asked me so many questions about it? Because you don't want to read it. Around our statement of intent, the Reserve Bank, I'll say it's fair to say, we have a lot of catch-up to do. And we have been doing that. In fact, we started the last 12 months or so around our technology, our capability, our capacity. Probably as much more around technology and capacity. Just, feet on the ground and systems. We've been very, very good at doing a lot of just-in-time technology adjustments and relying on what we're told as opposed to proof of what we've been told. And so that has come through very clear over several years now from international experts, the IMF financial sector assessment programs, and especially domestic folk who we regulate, saying, we actually want to see more of you so that the issues aren't so significant or so delayed, because we are part of that mechanism. We are a full-service central bank, and it's really, one of the documents that we're putting out today. We're putting our statement of intent out. We're also putting out our funding proposal, the document that underpinned the funding agreement that came out Friday. And we want to do that because full transparency, and it really does help for people to understand where we're coming from when we were saying these are the areas, these are the risks that we are holding that we shouldn't necessarily have to hold. We'll always have risks, operational, legal, financial, reputation, but some of them were needed to be mitigated, managed, or even avoided completely. So the document is written in very much as a risk appetite statement framework on the way through. The full service nature we do is from the physical cash distribution and then the monetary policy implications that come with it, the payment and settlement systems. We bank the banks, and we need to make sure, and then we bank New Zealand with the rest of the world. They are unforgiving. Most of them are 24/7. All of them should be. And they have to be absolutely robust. You only ever know about them when they're not working, like all good utilities. Prudential regulation around promoting confidence and satisfaction in our banking insurance system, that full wide range. And we show in the document there a diagram across many, many other countries, and we have a very wide span. It's deliberate, it was debated whether it should or shouldn't be separated, and a lot of it came really down to the economies of scale and scope in a small open economy like New Zealand to have this all in the one spot. What it does mean, given that unique breadth of activities, is that we need to be adequately resourced. And we've been coming up most short, and where most of the additional expenditure is looking at is around the digital strategy or digital capability that we've talked about, not just cloud-based, for pure risk management, but also for knowledge creation and knowledge retention. Too much of it is done, from individual person to person, particularly around the regulatory side, building up that customer relationship management profile, understanding who said what to who when they last did, and making it a living organism where intellectual property doesn't leave the room every time someone decides to take on another role. Sound familiar? And so a lot of work in that area. And the other big expansion area is around people in the regulatory role. And so having people on the ground around supervision and policy. We've had a kind of an incremental increase, a marginal increase year on year, even though some of the changes to the mandate have been quite significant. Non-bank deposit takers, insurance companies, all coming into the bank. One-off kind of guesstimate is how we can manage the initial inflow, but then not a lot of forethought or management around now what is needed. So as society's expectations have changed, as the regulated institutions have changed, as the complexity has changed, we need to move with it. And so that's where we've got our shingle out, looking for more people. And part of that is also expanding our footprint in Auckland, where the vast bulk of headquarters now are for many of the institutions that we regulate. I always smile that by the time you've made it to the Auckland airport in 1 hour, then you have the hour on the plane and then 15 minutes to get here. Even the laziest chairman has had 2.5 hours to think what they're going to say to me to make it sound good. So, the ability just to have more regular interaction, closer to home, closer to their headquarters, I hope will bring great fruition. So that's where we're at. What else are we doing? Well, when you look at the document of our statement of intent, you'll be excited to see the Tāne Mahuta story coming through, the way we explain ourselves. That I've mentioned, we want our Te Ao Māori strategy to be very core, for people to understand that diversity and inclusion are critical to our full potential. The types of activities we're doing over and above, and I know Simon sitting here is the proud owner of quite a few of these. The first one not though, revamping our cash management system, where the whole vaulting and distribution of cash is being reviewed, revisited, and will be streamlined significantly from what we currently do. We are saying it's less cash, not cashless, is where the world has gone to, and that makes quite a different change to how we traditionally operate around cash management. Fintech, we all say that, and then we've all got a slightly different idea of what it might mean. We're starting to invest far more internal thinking around what are the opportunities, what are the risks, and what does it mean for financial inclusion, efficiency, and in particular remittance payments as well. So the fintech world, we're working both directly amongst ourselves, but with the industry and increasingly through the Council of Financial Regulators. A lot of work around our data and supervision, which I've already mentioned. Probably one thing that I haven't mentioned is that we have committed to benchmarking ourselves against what we said would be an effective relationship between the bank and those people that we regulate. And we're publishing today our first survey results on that, around how the banks and insurance companies feel about our regulatory behaviour. So it's meant to be a two-way story, but this first one is marking us against what we promised we would do as a regulator. Climate change, always and everywhere. Remember, that was the big crisis prior to the most recent one. And we've got our three-pronged process. One, making sure that our own footprint is sensible and sustainable. 2, making sure that in our supervision regulatory role we are working with our institutions to understand where they see that risk and how they are managing the risks, not just within their own book but with the customers and people they bank. And also we are acting as a conduit, a collaborator with significant international organisations, particularly other central banks. There's the Network for Greening the Financial System, 60 plus central banks worldwide who are working on creating economic stress tests, supervision, schools, education, so on and so forth, to be able to upskill us all in the art of working out what really matters when it comes to transitioning through this carbon challenge that we have. We're working a lot as well with our South Pacific neighbours, both Australia and the South Pacific Islands, and in particular a lot of the actual work we're trying to target on some some very clear effective targets that we can achieve, and the one that we're well advanced on, and Simone and team have been spearheading, has been around trying to make the remittance structure between Australia, New Zealand and all the South Pacific region available, cost effective and able to stand up to all of the international regulatory requirements. And that is a real challenge, but we're working, the RBA have got the same rocket, and we're working very closely with them to make this happen. So the South Pacific still sit out there very embarrassingly as one of the highest cost regions in the world for remittance, even though many of our neighbours have anywhere between 50 and 80% of their income from remittance on that side. We're working very closely with our Council of Financial Regulators. We've pulled it together in a far more formal outlook, and in our speech there's going to be lots of little web clicks you can do to see what our work agendas are under the Council of Financial Regulators, and there are many similar topics there, topics that go right across the whole finance industry: climate change, financial inclusion, cyber risk, so on and so forth. So we are working together rather than just sharing notes on what we did last week. How can we be forward-looking and proactive? So in conclusion, the global economy will always change, society's expectations always change, and that means Te Pūtea Matua, the Reserve Bank of New Zealand, needs to be able to evolve and change as well. Some of this change is absolutely dramatic and unanticipated. That's the COVID-19 experience, of the most recent example we're living in. Other changes are always and everywhere, and are sometimes quite slow moving, that they can shift a long way before we've done anything about it. I'd probably put technology and climate change as 2 really simple ones in there, but also society's expectations on how they want to work and behave. So, and that's been given a jolt as well through this COVID-19. All of that is in our thinking, and all of that is explained in our statement of intent that we put out around how we want to change and the benchmarks for success as far as we're concerned. We want to be relevant, which hasn't been the case. I'm considering that we are still failing, given that only one person has even looked at the pending legislative change. I do find that stunning, actually, so I'll just repeat that. So relevant, we couldn't really communicate beyond a few bank economists around what we were trying to intend to do. We are now getting significant engagement across a really broad sector of society by using different communication techniques, different channels, and actually trying some plain English speak from time to time around what we're doing. So that is good. We were told we were a very trusted institution, but no one knew what we did. So that's not exactly the widest base of trust that you can manage, is it? Imagine if they had found out what we actually did do. Would that enhance trust? And really what I want to do, which I think I've just done, which is appeal to you all to assist us in this change process, to get engaged. I was going to say remain engaged, get engaged, be active around at least being aware of what the changes are. Some of you, it was like there's a war you were fighting in around whether the central bank should be independent or not, and now you're talking about a new board and people haven't even looked at it. So, these are significant, and you shouldn't have heard it here first. Tēnā koutou, tēnā koutou, tēnā koutou katoa. Happy to answer questions.
Sure. So, okay, if I'm moderating?
Yeah.
Okay, so open the floor to questions. I've just looked over Diego's shoulder. No one's put anything in via Zoom yet, but to those watching from their office or from home, please feel free to put them in and we'll relay them. So firstly, to those attending here, any questions?
Adrian, in terms of your work streams, blockchain and digital currency, is that an avenue you'll be developing further?
Yeah, that is sitting inside the fintech. It's more of an awareness. We produced a short trilogy. In fact, it was done pretty well in publication when I arrived, largely about positioning what they are, what they aren't there. So we ourselves we don't have a work stream on creating an e-currency or anything. It's as much about just being aware of what it is. I have to say the complexity, what seems simple on the face, and like everything, the more you climb into it, the more challenging, not necessarily the technology, but the use and marginal benefits become a real challenge.
Jenny?
You mentioned the Business Finance Guarantee Scheme, and there's also the IRD Administrative Scheme for Small Businesses. That only lent 1.4 billion. I think the government's allowance is over 5 billion. The banks have been very slow to lend under the other scheme. Are you concerned about how slow the money's going out the door?
I think you'd have to ask the government that question. That's we play a facilitating role. Sorry for sounding so glib.
Bernard?
I suppose the obvious institutional question is the set of institutions and processes appropriate to inflation control and monetary policy also appropriate to the prudential supervision, or should it be a different institution altogether doing prudential supervision?
Yeah, so in the, I won't hold the crowd up long because if you go and have a look, this was a significant part of the debate that led to the decisions around the Institutional Act. And so you can go in there and you can see, like all good balanced decisions, as many pros as cons, and the Minister and Government decided to keep it as a single institution. And I think it largely came down, and people might be able to, Mike, you might be able to better understand, I think it largely came down to the economies of scale and scope kind of argument that they're all there, it's hard to, the information's there wasn't that much upside in separating the two. Having said that, they are very different, kind of regulatory, actually internally governed roles. So the Monetary Policy Committee has been carved out with external participants, external experts, and that's run on its own course, and then the rest is managed internally. So I will refer you to some reading.
So, Jeff, just to speak loudly as well so we can pick it up.
Yes. Adrian, no doubt sitting within fintech is the question of open banking.
Yep.
What's happening on that front as far as you're concerned, given that New Zealand, compared to some other countries, is behind the 8 ball on that. The whole question of clients' access to their own data that's held by the banks.
Yeah, I'm not in a position to tell you whether we are behind the 8 ball. Actually, Jeff, you may know better, and I'm happy to hear that as well. Whether you are, I mean, we've made it very clear that we support a competitive system. We support the open banking role, and the data privacy seems to be quite a challenge for banks and customers themselves. I'm not sure. I was actually under the impression, and I'm sorry if I'm wrong, that was pretty well the case globally. Some are being more regulatory enforced. They might be further down creating regulatory enforcement to release data. Is that the case?
Well, I know the UK is considerably more advanced.
So that's not the rest of the world, that's the UK. It's
some other countries.
Another country.
It's over here, yep.
Thanks, Adrian. That's great. In terms of the way you think about central banking globally in a post-COVID world, are there any things that stick out already that might be different going forward than they were previously?
Yeah, I think enormous amounts are different. One is the amount that we have learnt ourselves as central bankers globally. from what was taken as traditional tools were actually only quite recent tools. You know, the relative prices, I think a lot of central bankers have gone right back to basics around what is the role we print this stuff, and hence then what is our kaitiaki role to make sure it's useful through time. So that's not necessarily how it will change, but from that there may be change come as well. So enormous parts of the world are now far more comfortable about using alternative tools and comfort without it being seen as such a challenge to remaining operationally independent or focusing on low and stable inflation. So, you know, that flexibility. And I think, you know, I've read somewhere it might be the low inflation dividend or something, you know, where people are now more confident that inflation expectations are better anchored and that you can have a little bit more trust to do things which are slightly different to what it was yesterday. That's the first challenge. The other real challenge is, you know, the levels of economic debt that are out there and globally and the constraints that can have on some particular tools and uses for central banks. So, you know, the higher the debt, the more delightful a bit of inflation sounds, and is that going to be the catalyst for you know, rejigging banks to try and write some of this stuff off in future generations to come. So really it's put the light back on fiscal and real side policy. The limitations of monetary policy are extremely clear to people through this environment. Around how we work and how we share information, that's just gone. You know, that's just blossomed. I'd say that's for every industry. Central banks, you know, we're very good. We love to have our club meetings. We used to have to fly to the Basel. I was kind of expected to be there 6 times a year. Forget that. But the ability now just to share real information, real time, in full trust has been fantastic rather than set piece plays. Yeah.
No questions from Bill.
You got one more over here.
And I'll ask a question too. Yeah, go ahead, David.
Mr. Orr, I'd like to raise a question about the long-term future of the Independent Monetary Authority, the Independent Central Bank. As a background, there are 3 things that I've picked up on in recent times. One is there is a view, which I don't agree with, that inflation is dead and buried. Therefore, there's no need for an inflation-phobic institution. 2, that recent events have dispelled the illusion of independence anyway. And an example of that is an article I saw by Adam Toes, I think coming out of the San Francisco Federal Reserve. And that 1 or 2 commentators are now picking up, fancy that after 30 years that reserve banks are unelected. How do you see the long-term future of the necessity for an independent institution like the Reserve Bank as we know it now?
I'd be really worried given the fact that no one in this room has read one has read the documents that are going through Parliament. That's not to say the documents going through Parliament are threatening that, but unless you remain vigilant, I was going to say paranoid, I'll say alert instead, around these types of things that people have said are critical, important, then of course through time they will be eroded. An enormous swathe of the staff that we've got at the Reserve Bank have never lived, not worked, lived in times of inflation. And so, you know, that itself means, you know, what's the half-life, what's the change at a margin, what's the, you know, what's that thing. So it is really important to remain focused on the bits that really matter and how they are held onto. They can be held onto in different ways. And I think that's, you know, when you're saying the lessons, some of the, you know, the operational independence, the single focus, these things can be held on under a lot of different operating methods. But the core to it needs to, you know, remain through time. It's about, you know, getting through the myopia, all the different market failures that happen that have led to this modern concept of an independent central bank. on the way through. So that's good. One of the other challenges, which I think is really confusing, and I certainly don't blame anyone, because it was a bit what I said going back and learning your own work, is what is money financing, what is helicopter money, and what is quantitative easing. And they're all three very different types of things, but try and explain to that one in less than 5 minutes somewhere else. And these terms are all used quite interchangeably, even by very smart people who are, inside of central banks around the world. They get very used to their own colloquial use of whatever it is, yet they can have significant changes. Money financing, where government's fiscal policy is determining, the flow of cash through the system, is incredibly different to quantitative easing. Now, both could be managed, in a theoretical sense, but they are different. And so it's about, trying to make sure that we are clear and we understand. In this one here, around the Institutional Act, a single decision maker governor, and was as much around the fear and paranoia that this person would be overtaken again by a committee and start to behave consistent with whatever the current government wanted, rather than what was best for achieving low and stable inflation. And so a lot of the single decision making powers were put around the legal entity called the governor. Now, the Institutional Act is removing all of those from the governor and put them in a board. So that in itself is a step, but the actual appointment processes for the board and the governors aren't changing. And so, there are nuances upon nuances that need to be teased out and understood. And a lot of those nuances won't be understood until we know who this board is, who the governor is, what the delegations look like, so on and so forth. So, keep that paranoia up front and read these documents.
Thank you.
Could you give us a sense of, you're obviously making a significant investment now, you've received the funding, appropriation, so give us a sense of the proportions, where that's going in the organisation?
Around 40% is supervision, 40% of the increased expenditures, so that's largely around people, but also they need to sit somewhere and live. 20% is around our digital strategy, around the cloud movement and the increased investment in internal technology capability. The rest is spread across lots of different nuts and bolts, but that's the guts of it. Very much quite simple, really. Mm.
No questions from the Zoom, so one final question then, okay?
Just a geeky one, Adrian. I mean, this is about the sort of structural change. As you say, the power's going to be handed from you to the board. The board's going to be the decision-making body, but its primary responsibility is to be financial regulatory, because the NBC does the money stuff, right?
Yeah.
But the board is also then the primary agent in the appointment of the NPC and indeed of your successor. But they'll be appointed presumably for their sort of corporate financial regulatory expertise, and the NPCs are more sort of macro monetary sort of things. So, I mean, how have you thought about how that's reconciled, whether those people are really capable of being first-rate people from the monetary policy?
No, that's right. That's right. I mean, one, the risk has been slightly mitigated in the sense that it's a committee now, so we can't all fail to one ill-informed person, so and a committee with a high level of transparency. So if they're really off beam, one would hope that that's picked up pretty quickly through the usual processes. But it's even a little bit even more complex than that, Mike, in the sense that the minister is the one who actually appoints the governor, the CEO, and the minister also appoints the board. The board is then left to look after the CEO. And so you've got to have a lot of reliance that the board and the CEO are actually going to get on well. And the remuneration through the Institutional Act is also through the Remunerations Committee. It's not through the board. So what levers do they have, etc.? So I'm actually doing what I hope not to do, which is remove any necessity that you actually go and read these things yourselves. But normally the number one first job of the board is to appoint the CEO, and then they've got the carrot and the stick, and so on and so forth. It's a different model, and then you've got that NPC one as well. And there's going to be a financial, as part of the, it is in the Institutional Act, isn't it? The financial remit. So we've got the monetary policy remit, there will be a financial policy remit as well. And so the detail of that's going to be, it'll be a high overarching structure. But again, the detail of that's going to be really important. And it opens the bank up to many, many different places for the industry itself to engage with. Decision makers, they had to find this impenetrable governor. Now they've got far more targets to work on, around what it is. So this is the challenge. It's democracy, and these people aren't elected, but they're being appointed from elected officials, and so on and so forth. So it's about how do you get this rock solid and tight. Where people got to in 1987, I think, wasn't it? Was put it all on one individual because of all of these complexities. So it's a significant modernisation of the Act.
Okay, very good. Cool. Well, so on behalf of LEANZ, thank you very much for your talk, and put out the challenge to all of us to pay a bit more attention to what's going on. So we'll take that on. We heard it last year from Chris Finlayson, but again, so it's a good message to have, and thank you for engaging, thank you for coming along. And it's just a bottle of wine from David Teese, so I hope you can accept that if you can share it.
I'm going to give it to the best question that was asked.
Thank you.
Wonderful.
So I understand.